Today's Animal Spirits is brought to you by our friends at Y-Charts. Michael, yesterday we actually had an update with some of the research team at Y-Charts. Was asking us for some feedback, showing us some new features. My favorite part of the conversation with them was they asked us, what is it that you're looking for out of Y-Charts? And you wanted like intraday, 5-minute candle charts or something. And
Not exactly true.
you were looking for intraday stuff, and I asked for like a long-term scenario analysis of like dollar cost averaging and withdrawal strategies from a portfolio. And I thought that was just a good yin and yang for us. Anyway, so I put a chart in here today. U.S. job openings, total non-farm. We've been looking at this for a while. It peaked at almost 12 million, which is like double the amount of unemployed people that are in this country. It's rolling over big time. It's gone from almost 12 million to 10 million. I think this is probably, if you want to look on the bright side of things, probably a decent thing, at least in terms of like the Fed, that job openings are coming down. You hope that doesn't lead to people getting fired, but I think this would be the hope for. It's not going to be as bad as everyone thinks. We just have job openings cut in half or something, and that's like the soft landing scenario. That's probably way too optimistic of a take, but that's I'm grasping here. Anyway, I got a whole economic dashboard on Y Charts. If you want to check it out, you can see all the intraday stuff Michael's trying to get pushed in there, and all the long-term stuff I'm trying to get shoved in there. Michael had a good target date joke.
I did it. That was a good zinger. So I love my dashboard. I've got asset classes, I've got FanMag, I've got sectors, I've got the ARC names. And they were asking Ben, what does his dashboard look like? And I said, 2030, 2035, 2040 target date funds.
That's about it. So go to Y Charts, tell them that Animal Spirits sent you, and they'll give you 20% off when you first sign up.
Welcome to Animal Spirits with Michael and Ben. We're starting with the timestamp, Tuesday, October 11th, 9:40 a.m. My eyes are glassy. I had a late night.
Let's hear it.
Night. So we played football yesterday, flag football. Kobe is 5 years old, and during practice, they were playing a game called Sharks and Minnows. You familiar with this game?
Yes. We play that in soccer a lot. The kids do. Seen this one before.
So Kobe was, I don't know if he was a shark or a minnow. I'm not familiar with the rules, but he was being chased. So I guess that would make him a minnow. So he was being chased, and he's looking over his shoulder for the great white that's about to get him. And as he turns, there was another boy running in the same direction, and they collided. As soon as he turned around, and so I saw it, and I'm not like a hysterical parent. I usually am the dusted off type, but I immediately ran over because it was a rough hit, So Kobe's screaming, and I picked him up, and he's not like a screamer, he's not like, he doesn't cry like that. And he said, I broke my leg.
Wow.
Pretty immediately. He said, I broke my leg. And so I took his cleat off, and he's freaking out. And I didn't know what to do. I didn't know how to calm him down because he was just in a lot of pain. And so we left. And I called Robin, and I told her that Kobe, had a pretty good collision, and we're going home. And she's like, you didn't even try to get him to stay. Why are you coming home? Are we those parents? We're just the couple of parents. And I was like, yeah, you're probably right. I was like, I don't know. I panicked. I wasn't sure what to do. He was really upset.
In her defense or your defense, it is hard to tell sometimes if a kid's really hurt or they're just milking it, and you don't know.
Yeah, I was like, it looked like a rough hit, and he's usually not dramatic like that. So anyway, so we got home, and on the car ride home, he's telling me to slow down on the bumps, and it hurts. And he had the full ice pack on his leg. Usually we do there's the gel, the fuzzy animals with the gel sort of ice things. But this was full ice, just a straight up ice pack on his leg for 30 minutes. I took it off. I put another one. So he's an hour, just straight ice pack. And I'm like, I think this is serious.
Yeah.
And so we tried to get him up, and we said, all right, Kobe, let's see if you could walk in it. And he just lost his shit. And so I said to Rob, I was like, pretty sure we should take him to the doctor, right? Let's go to City MD or one of those clinics. And Robin took him, and she called me, and she said he broke his tibia.
Oof.
And the tibia is your shin bone. And so I like started crying. I felt so bad that, like, I don't know, that first of all, that like he's gonna be in pain, and that we didn't take it seriously enough, and not good. All right, so we got home at, what time was this? Like maybe 6:30. And we ended up going to the children's emergency room because that's what they suggested we do. We got there at 8:00, and it was a long night. It was just a long night. X-rays. So at the WebMD, they put him in like a soft cast, and they did a X-rays there, and we didn't get home until 6 a.m, and he's got the full cast, like pretty much all the way up his thigh.
Is that like a 2 or 3 month thing?
I have no idea what we're going to do because he's totally immobile.
Right.
You can't get him. They said he's too small for crutches, but that doesn't make sense. We're gonna have to get him crutches. So we thought about the scooter, like with the handlebars, and you put your leg up, but he can't bend his knee because
because all the way up. Oh man.
Because the cast is like all the way up.
You're gonna need a wheelchair.
So we're gonna need a wheelchair. I think he's not gonna be able to go on the bus. I'm gonna have to take him to school every day. And I just feel terrible for him. He's obviously out for the 2023 season, and I think he was breaking out. He was having a good season, coming on strong.
Adam Schefter just reported he's out for the whole season.
Anyway,
that's tough, man. I honestly don't know how little boys anytime they're doing anything, are constantly running into each other, running into stuff, falling off of stuff, jumping off of stuff. But yeah, we're surprised that hasn't happened yet. We had it with our daughter Libby in soccer last year, where she went to the ER and she hurt her ankle pretty bad, and they told her she broke her ankle. So they sent her home on crutches, and we're thinking the same thing, like, oh God, this sucks. 4 hours later, they called us back and said the doctor read the X-ray wrong. It really wasn't broken. So we had 4 hours where you're gonna have 3 months.
I sent you the X-ray, and as soon as Robin sent me the picture, that's when I started crying because I was like, oh no. And obviously, I'm not a doctor.
I don't know how to read X-rays, but there's like a huge. You can see the line. It's pretty visible.
And there's like two of them. There's like two. So anyway, but this morning, I told Kobe. I said, "How are we going to bathe them? By the way, is there like a giant balloon that you put around their leg?"
Man, that's a good put. You probably got to put you put a trash bag and give him a shower. Probably.
He's totally immobile. So anyway, so I said to him this morning. I said, "Hey, so Kobe, you broke your leg," and he looked at me. He goes, I told you I broke my leg at football. That is pretty incredible that he said that immediately. Like, I didn't even know he knew what a broken bone was. How do you know what a broken bone is?
That's tough, man. I feel for you. You're gonna have to, I remember in college, we had a friend who broke his ankle playing like pickup basketball. And for 2 months, he had to have a cast on. And like he couldn't get to class on crutches. So like there was like 8 of us that were his friends that had to drive him everywhere and like drop him off at class and pick him up and bring him to lunch and get his lunch for him. And we were being good Samaritans about it for a while. But after 2 months, we were all sick of it and ready to like shove him down the stairs because we were sick of doing stuff for him. But I guess it's a little easier for your son. So
I wrote, I'm preparing an open letter to the league.
You want compensation. So that's a case of bad news is bad news, right? There's no silver lining here for you for a while.
I don't know. I don't think so. I mean, no.
I mean,
have
you been a cast before?
Segue time.
Yeah.
No. I don't even know how that's possible. I grew up playing sports. I never broke a bone, as far as I know. Okay.
It's like the worst smell in your life after he has it on for like 6 weeks. Just preparing you for that. It's gonna like his leg is gonna smell like Jeffrey Dahmer's basement. I'm just preparing you for this. So just so you know. All right. So that's bad news is bad news. Now, for a while, at least, it seems like good news is bad news in the economy, at least with when it comes to jobs. So it sounds like, I mean, most days in the stock market, you don't really know why it's up or down from one day to the next. Sometimes, a lot of times it's random. But there are certain days when a piece of data comes out, a news headline, and you can see something happen immediately. And Friday was that day. Job numbers came in better than expected, and the stock market got walloped again. It's really the great thing about bear market rallies is they happen and then they just don't last. It's so much fun, right?
It's a great time.
Yeah.
Can I just say Uh, we're we're in a bear market, Ben.
Yes.
Like I know that's obvious, but does life feel different to you yet?
Uh, yes.
Does your wife treating you any differently?
I wonder how many people actually know we're in a bear market. Like I've been talking about recessions. I mean, how many normal people like talk about the fact that the stock market is down? It feels like, I mean, when you have conversations with civilians, if you're at the football game, does anyone ever talk about the stock market? I don't. I have heard nothing from regular people about
Uh,
it.
Not only that, Ben, but last week, one of the dads said to me, "So what do you do for a living?" And I said, "I'm in wealth management." And he goes, "Oh." And there was like two other dads there, and nobody was like, "So this
It
market, huh?"
Yeah, it didn't take the bait, right? I haven't heard, I think people are still focused on inflation. So John Authers from Bloomberg had this piece that looked at something. I think it's
But wait,
from.
one last thing, not to belabor the point, but it is kind of interesting to just like take a pause and zoom out and know that you are living through a period that future generations will be reading about, much like we have read all of John Brooks's books in the '60s, and we're like in it. We are in the throes
Can I
of
just
wherever this goes. It's
can I call
interesting.
shotgun on like the great inflation of 2022 for a book title someday that I'm gonna write? I mean, I'm not actually gonna write it, but
You have
I'm
another
calling
book in you?
shotgun. No way. I had a publisher emailed me this week saying, "What's the next book?" And I said, I'm done. There's no way I'm writing another book. It's way too much work."
Yeah,
All right.
I can't imagine what would compel me to write another
So
book at
this
this
is
point.
from Deutsche Bank, and they look back going back to 1980. In 8 of the 9 tightening cycles for the Fed, the unemployment rate was lower a year after the tightening cycle began. So I have this graph here, and then the only time
Wait,
it happened
hold on. Say that one more time.
when the tightening cycle begins. A year later, the unemployment rate was lower a year after it began,
Why
meaning
is that?
there is a huge lag between the Fed tightening and the unemployment rate. The only time it happened was Paul Volcker in 1980 because I think they did it so aggressive. So maybe that. So I'm saying if you
Wait,
think about
I'm sorry. When you say the unemployment rate is lower, just so I'm very clear, does that mean you're talking about like going from 6% to 5%?
yeah, look at the table here. It says 1 year after the start, it's still falling as they're tightening, and basically saying the Fed policy does not work immediately for employment, which is what they're trying to see. Is they want employment to get worse. They want
But
the labor market to get worse.
it looks like even 2 years after,
Yes, it's
it's still
so.
falling. Does tightening not lead to unemployment going up? Surely it must, right? Doesn't tightening slow the economy? Isn't that what we're told? Doesn't
It's
that just
just
make
on a
sense?
lag, and maybe it doesn't really work until they throw us into recession. And it takes a while for them to throw us into a recession. So the point would be: does this mean that there's just way more pain ahead for a lot of stuff? If the Fed's just going to go, okay, the labor market is not it's not softening, it's not softening, it's not softening. That doesn't seem like a good thing to me.
You raise an interesting point because I've been wondering, as have a lot of other people, why isn't the data turning? And to that end, uh, because financial conditions are obviously tightening, right, between the stock market and credit spreads and mortgage growth and all of that sort of stuff. Bespoke tweeted, "We're now in the longest streak of better than expected non-farm payroll reports since at least 1998. That's not good. That's not good. We keep seeing unemployment come down, jobless growth is robust, as they say. When is the data going to
I
turn?"
tweeted this out last week. I think this happened so close to the 2020. I think part of this is too how many employers right now are willing to say I'm going to fire 20% of my staff beyond the tech companies that are obviously they overstaffed. If you just had 3 years at a restaurant where you couldn't hire anyone and people were staying at their job for a month and then hopping to another job, are you really going to fire a bunch of your staff right now and then try to do that all over again? I'm sure there's a lot of employers who are going, there's no way I want to go through this again.
I worked at a upscale Italian restaurant during the Great Financial Crisis, full time, because I was home like a loser. Only one of my friends home going to school here, and so I worked. So I had nothing else to do, and I had to pay rent, which is a whole other story. But the restaurant was empty. Like you saw that it was a recession.
Right.
It was moderately busy on the weekends, but during the weekday, there was like 4 tables.
Right. Yeah, that's not you don't feel that now, right? Where like places are everywhere you go.
Not even a little. People are still
Every
spending like gangbusters. At least
okay,
anecdotally, it looks like that
so I
way.
looked at this yesterday. So the S&P from the highs is down like 24, 25%. From the COVID bottom, we're still up 65 to 70%. Since the end of 2019, we're up 18% still. So if we're going pre-pandemic, we're still up almost 20%. So I looked, 3,200 is about the number where we were at the end of 2019. So that's like another 12 to 13% downside from here to take out all
But
the
that
gains
makes
since
sense.
2020.
Just get rid of all the COVID gains. Which by the way, the Dow already did. I think the Russell already did. The Nasdaq.
So if the S&P went down
definitely
we had another correction from here, 10 to 12%. That would take away all the gains. So that'd be probably almost like a 30% correction in total. That would put us at a nice average bear market,
not.
I think.
Robin just sent this to me.
He's going to have to get a little bell for you guys. At least he's got a pretty cool cast on. All right, so here's my thing about the Fed. So we've talked about this before. So this is from the Atlanta Fed, what is it called? The wage growth tracker. You
Yeah.
look at it from job switcher to job stayer and then overall. So the job switcher, their wage growth is like 7%. So it's like if you've changed jobs, you've been able to negotiate a much higher salary. And everyone has gotten wage increases, but job switchers especially. I feel like we've had 40 to 50 years of declining worker negotiating power and bargaining power, and the employers have had the upper hand, right? They say capital has been beating labor for like 40 years. And for all that time, economists are like, well, there's nothing we can do about that, right? And then now we've had 18 months where workers have the upper hand, and economists are like, we must put an end to this immediately. And I just think, let's like let this breathe a little bit and see what happens because I went back and read the book by Applebaum, which was, what was it called? The Economist. Yeah,
The Economist Hour.
The Economist Hour. So I read, he has a whole chapter on Volcker and what happened back then. And one of the things, so Ronald Reagan was totally behind Paul Volcker to put us into a recession. And Reagan basically said, listen.
That was a good one, by the way. Probably best economics book I've ever read.
Very good. But he basically said, we need 2 to 3 years of pain to get through this inflation that we've been dealing with for 15 years. Let's just get it out of our system. And he was all on board. But the thing that was different then is that there was so much more union representation back then. So Reagan really wanted to kill the unions. He said the unions had too much bargaining power, and that's what was keeping inflation high. And back then, it was like 1 out of every 3 workers was a member of a union. Now it's like 1 out of 10. So my thing is, we've had this huge bump because of remote work and all this stuff, but I don't think workers have as much bargaining power as they did back then in the 70s that people are worried about, like this wage price spiral. So I just think that like the idea that this is the 70s is the wrong way to look at it. And I don't see what's wrong with letting people make a little bit more money and have more negotiating power over their employer.
Nick Colas was on the Compound and Friends on Friday. Did you listen to that, by the way?
Yeah, the guy he's so impressive.
Is he the best?
Yeah, he's very good.
And we were talking about how Neil Kashkari said that he doesn't see any evidence that inflation has slowed, and I said, really? I gave like the blinking gif, you know?
Mm-hmm. Yeah, right.
And Nick, who obviously is 4,000 times smarter than me, said that he mostly agrees with Kashkari. Yes, we've seen a lot of the commodity stuff turn. However, I think wages are the thing. Labor is the thing. This is the sticky part of the inflation. And until they see this softening or slowing, forget about turning.
I just don't see
they can't back down.
Why do economists think people making more money is a bad thing? And I get it. If people make more money, costs have to go up, and then you worry about like it's going to be a self-fulfilling prophecy.
Yeah, I think that's it. Because there's nothing else that is sticky like wages. Because the more money people make, the more money people spend. And then,
but again, like
I don't know how you break that.
We have 40 years of stagnating wages for a large percentage of the population, and that part of the population is now the one seeing the biggest wage gains. And I think you have to use your brain a little bit and think. Not just wage gains for the whole country, but wage gains for the lowest level of incomes are going up the most. And I don't know why we want to just snuff that out right away and not let that happen a little bit.
I'm surprised to hear you say that.
Listen, I'm willing to sacrifice my stock portfolio so people on the lower end of the income scale can credit to me. I'm just saying, like, I think you have to use some common sense when thinking about this, that the people on the lower end of the income scale are finally having some negotiating power to be able to earn more money. And the economists just say, we got to put an end to this immediately, now.
But here's the problem. They're still seeing negative real wage growth, unfortunately. Not in all cases, obviously. But now I guess you could say, well, their wage gains will stick, but inflation will come down, leaving them with better real incomes over time.
So here's what the Applebaum said, which was, I think this is cherry picking a little bit, but he said, That's what they said last time. Volcker and Reagan said, if we crush inflation now, and obviously inflation, look at the chart I put in here of inflation back then. It was
Where
it
is
was
this?
only
Oh,
it
there it
was
is. Yeah.
above 4% every year from 1966 to 1979.
Yeah,
It
come
was
on. This is not that. This
it
is
was
not that.
ridiculous. But he said, Applebaum says American workers did not recover from the Volcker shock at all. The median income of a full-time male worker in 1978, adjusted for inflation, was $54,000. That number was not matched or exceeded at any point during the next 4 decades. As of 2017, the median income of a full-time male worker was $52,000. So basically, adjusted for inflation, didn't go anywhere. Now, we've talked about this in the past where people don't stay in the same income cohort. They go up, they go down. Those are kind of hard. But he's saying the nation's annual economic output adjusted for inflation tripled over those same 4 decades, yet the median worker made less money. He's saying the people who own businesses did so much better than the workers that it's time to put it to the workers or put it to the business owners, and they can have lower returns now so people get paid more. Which I think is a fair thing to say, and say maybe these businesses should stop taking it all to the margin.
So are you saying that inflation is going to fix income inequality?
It kind of has. The look at the net worth of the lowest bottom half of people. They've had seen their biggest relative net worth increase in the last 3 years than they have in decades.
You know, it's a good strategy for this week's show. Avoid the comment section.
Fair. All right. So this is from Barron. Stocks look cheap. Go back up a little bit. So this is stocks in Italy, UK, Germany, Spain. All 4 of those countries have forward PEs.
Wait,
under
I'm
10.
sorry. I lost you. Where are we in the doc?
Right below the wage growth thing. Bargain hunting.
Bargain hunting. Got it.
So forward PEs they're looking at. Emerging markets, France, Japan, all these are really low. Even the US is at 15 times forward earnings. Now, the smart thing to say right now, I've heard a lot of smart people say this, and it seems like across the board, the really, really smart portfolio managers and macro people are all like extremely bearish. I have not heard one like big name person who is not just like, this is going to get worse. Inflation is here to stay. Stocks are going nowhere. Like all of them are saying this.
Well,
Right.
one other thing to what they would say is that this is, and I saw Jim Bianco talking about this. I don't think I think people underappreciate the fact. This is what they would say. People underappreciate the fact that this is a regime change, that the era of easy money is over. And not only is it over, it's not coming back. The Fed is not going to pivot. It's over. So the fact that stocks were trading at 23 times earnings over the last decade or whatever the number was, throw that out. Yeah. If you think 13 looks cheap, you might have another thing coming.
That's
fair.
So,
that's fair, and we'll see.
But yes, and also, like, the Fed's not going to ease in the next recession. I'm happy to be called an idiot for saying this, but come on, this is a man-made. This is what Nick Polis said. He said this is a man-made recession. It's going to be a man-made recovery, and unfortunately, it kind of feels like all of our cycles are going to be man-made from now on. Whether it's fiscal spending or monetary policy, I feel like we're just going to go back and forth for a while.
They're never leaving. Like this idea that they're going to turn the Fed funds rate over to the 2-year and let the market determine where rates are. Yeah, good luck with that.
So if you want to sound really smart right now, you say all of the current losses in the stock market, the 25% down, that's all re-rating from interest rates going higher.
True. And you don't buy that, Ben?
So no, but listen, what they say is what happens when earnings fall. That's the next leg down. Right. And I'm one of these people that I don't know how you could understand exactly what's priced in. Like, I know this is all from rates, but earnings are coming next. So look at I did the earnings chart I sent to you.
Agree again, Ben. We don't know what's coming next.
This is earnings versus the stock market from 1930 to 1921. I looked at what happens when earnings are up year over year versus when they're down year over year.
Can I tell you something before you reveal the data? I almost want somebody to fact check you on this. It just seems so outrageous.
You'd be surprised. People fact checked me on every data table I send. I must get 4 or 5 emails from people saying, "Hey, I ran these numbers just like you did, and this one number is off." And occasionally I'm wrong. But
all right, lay it out.
I looked at when earnings are up year over year or down year over year. So I'm just looking at calendar year, up or down. And then I looked at what happened to stocks. Stocks are positive 77% of the time when earnings are down year over year. They're up 10% or more 60% of the times when earnings are down. My whole point is, hey, the stock market is forward looking. Earnings could fall and that could crush stocks more, sure. But isn't it, do you think the stock market is really that dumb that it doesn't know if earnings are going to fall? It's like everyone sees that clearly.
That's a good point you raised. You know what's interesting? I think we looked at this recently, just a very blunt analysis. When inflation is rising or falling year over year, that is a material impact. Yes. Maybe because nobody can predict inflation, but the market can suss out earnings growth.
Right. Yeah, I mean, they're constantly changing and updating earnings estimates, and the estimates are not always right, obviously. But
this really surprised me. So what Ben is saying is that when earnings are up or down year over year, that had no impact on average returns going back
to
the
be
last
fair,
100 years.
when there's a recession, earnings get killed, but usually they don't fall nearly as much as the market. So is the
Hey,
market front running a little bit this potential earnings decline? It's probably coming.
Jim O'Shaughnessy had a tweet yesterday about how Facebook is down 67% from its highs.
I blame the metaverse pivot.
So Facebook had a market cap of over $1 trillion, Ben, in September of 21. It's $340 billion right now.
Jeez.
340, dude. It was $350 billion in the summer of 2016. This has been one of the best performing growth companies. Now, forget about stocks. Just look at the fundamentals of this company. Since 2016, the stock is flat. You know, I'm starting to think that stock picking is not easy. Jim O'Shaughnessy tweeted something about a book that, Ben, I think you and I both read, called A Very Good Year.
And probably somewhere behind me. Great book.
So I think he looked at the 10 best years? And it was a really good analysis of what was going on in the time, what led up to those good years. And not surprising, all of those very good years followed very bad years.
Yes.
Right? So I think maybe 1975 was in there, 2009, 1908.
I think 33 or 34 was one of the better years. Something like that.
Things
one of
like
those.
That.
Yeah, it's true.
And market is getting clocked again.
Here we go.
Ben, the NASDAQ is now in a 35% drawdown.
Jeez.
Here's another thing. Like the whole growth to value thing. Can the market do well if this has legs? Given how big growth is compared to value.
I mean, the S&P.
So maybe this will be a stock pickers market. You know how following the .com bust, it was all about shifting away from growth. Right. If you were in anything related to value, whether it was dividend or share buybacks or whatever, anything that was not growth, you outperformed big time.
So you said the Qs are down almost 35%. The NASDAQ 100.
No, more. Yeah.
Okay. The Vanguard Small Cap Value ETF is down 19%. So it's outperforming by 15% in this downturn. That doesn't feel that great. You'd rather it be outperforming at 15% when things are up, but that's a pretty good spread.
Okay. So Ben, did you write a post about this, or were we just talking about why are junk bonds outperforming treasuries?
Yeah, I did write it. So I looked at the JNK ETF versus the IEF, which is JNK is high yield, and then IEF is 7 to 10 year treasuries. And this is as of yesterday. Treasuries are down 21% from their highs, and junk bonds are down 15% from the highs. So people have been saying spreads aren't blowing out, so there's nothing to worry about. But my point is, the only reason spreads aren't blowing out is because usually in a crisis, treasury yields either stay where they are or go lower. This time they're going higher, and their treasuries are underperforming junk bonds. That's why spreads aren't blowing out. And should we really not be worried because now high yield companies are gonna have to borrow at 9 or 10%? Does it matter that it's still relative to treasuries not that bad, but relative to where it was, it's way worse?
So I would imagine that high yield debt issuance is down a lot, and I'm sure somebody can correct us or give us some color there. But these companies gorged on debt in 2021.
That'd be the hope that they have a bunch of. They're like the homeowner sitting on a 3% mortgage because of all the debt they took out, right?
Exactly. So State Street has this thing where they looked at credit spreads, and Bloomberg High Yield Energy Index blew out big time in 2020 for reasons that are very obvious to everyone. And corporate high yield spreads are on the rise. Same thing with just U.S. corporate spreads. And they're above their 20-year average, but not by a ton. Not by a ton. So, for example, the lowest rung, U.S. high yield triple C and lower, the 20-year average spread is 1,049 basis points.
That's a lot.
And right now it's 1175. So the 20-year average is 1,049 right now. It's 1175. So again, a little bit elevated, but to the point of when is the data going to turn? And now maybe we get it in Q3. Or maybe we get decent earnings, but we get forward outlook that's like in the toilet. But we haven't seen stress, a ton of stress.
Don't you think that the bond market pivots before the Fed? That at some point the bond market is going to sniff out, okay, the Fed is going way too far and there's going to be a recession and Treasury yields are going to fall. Do you think that kind of has to happen? Because if interest rates just keep rising and rising, I don't think that rates can keep rising and stocks can keep falling. I think at a certain point, the bond market is going to break trend and rates are going to have to come lower.
I don't think so. My opinion, my uninformed opinion on this, because I have no like empirical evidence, is that we've seen the stock market bounce way before the news gets better. In fact, when the news continues to worsen, right? And you're like, what the hell? This doesn't make sense, right? I don't know if that happens in the bond market. I think the bond market will wait. I don't think the bond market will anticipate a Fed pivot.
All right, because the bond market anticipated the Fed raising rates because bonds yields went way higher before the Fed even raised rates to those levels, right?
Well, that's what people said. The Fed was behind the curve, but I don't think it worked. I don't think it works in reverse.
I think this time it will. I think the bond market is going to know when the Fed's gone too far, and the bond yields are going to crash. And guess what? The Fed funds rate is going to be above all the other bond rates at some point.
That will be very interesting. That will be very interesting.
If the Fed keeps raising 75 basis points and 50 basis points, the whole Treasury yield curve is going to be lower than that at some point, and people are going to be going, okay, the Fed's behind the curve again. I think that's coming. Put it on your calendar.
For when?
All right. I don't know. Okay, so Connor Sen, you said a lot, Kashkari, who, by the way, I don't want to like disparage anyone's job, but this guy's the Fed president of Minneapolis. It's not like he's the Federal Reserve chairman. Why are we giving this guy so much airtime? He's in Minneapolis, right? I'm a Midwest guy, but come on.
Self-loathing Midwesterner. But there's not that many Fed bank chairmen, right? How many Fed banks are there? Is there 10?
It is kind of funny how it's like Minneapolis, Kansas City. I'm like,
it's like Fargo.
Know. Yeah.
Right? It's like
I thought like New York, the New York Fed is the one that really mattered. All right, so Connor Sen posted all these charts of like shipping container prices are crashing, used vehicle prices are crashing, home values are coming down, job openings are finally slowing, which we talked about. And he's saying, I think we're this is not a 70s thing. I think this is an inflation burp. And I think the best analogy there is the World War II. You can see this chart I put in here. Inflation got to almost 20% back then on a year-over-year basis, which is just nuts. And I think back then, because of the war, people probably didn't even care, or they're used to it because they'd had the boom-bust stuff from the Depression in the past. But it took 3 years or so for this to sort of work itself off. And I think that's the problem people have, is that no one's patient enough for this to happen anymore, where we can just kind of let it slowly go away because the spending purge that happened is gone. And so I think people want to see the inflation go down immediately, when even if like it was a transitory thing, it would take years for it to slowly wean itself off, right? It's not going to happen overnight. So I still think this is the best analogy. World War II. I would lean World War II over 1970s. How's that sound?
Yes, with you. With you.
Right. Okay, and so Eric Finnegan tweeted this out. 5-year inflation break-evens are down 130 basis points since March, the biggest correction in 20 years outside of a major recession. Inflation expectations have now lapped the supply chain inflation drama of 2021-22. You can see it's below 2021 levels now, inflation expectations. Now, the market is not always right in pricing this stuff in, obviously. But it seems like investors in these bonds are not worried about this.
I think investors will collectively price inflation better than they will a Fed pivot, at least bond investors.
Okay, interesting.
But you might be right. I think those two
will go hand in hand, though.
So Ben, you absolutely nailed this. Credit to you. Carl Quintanilla tweeted, Morgan Stanley has a 56-page report on inventory. Quote, we believe many will turn to aggressive discounting, which is likely to spark a race to the bottom as companies attempt to cut prices faster than peers and move out as much inventory as possible. End quote. Wait, are we talking about deflation on the way? So Ben, you've been pounding the table on the best Black
Friday deals.
Black Friday. Okay, I was going to say Black Monday. Black Friday.
I'm saying get your shopping list ready. There's going to be. I feel like TVs and all this stuff you're just going to be able to get it at. You could finally get rid of that line TV in your bedroom. It's that time. Just do it. All right, let's do some real estate. So, did you listen to the Odd Lots podcast this week? I think he's from Morgan Stanley's head housing analyst or researcher. Did you see this?
No, and can I make a confession?
Mhm.
I haven't listened to a financial podcast in a while.
What's the problem?
I don't know. I don't know if I just needed a reset, a mental break.
Okay.
If we're just doing so much, I don't have time to. I don't know.
That's for my mental break has been from reading nonfiction books. I haven't read any nonfiction, but I'm only reading fiction now, and I think it's because I'm reading so much other stuff that I just every once in a while a history book maybe, but nothing on the nonfiction side of things is catching my eye. I feel like you can do a nonfiction book and a podcast in an hour and get 90% of the book.
Yeah, I think there's two things. Yes, that is fair. There's two dynamics at play. One is football is back, so I'm listening to more NFL podcasts. By the way, how about the Giants? Was that a win?
How early did you have to get up to watch the London game?
It was 9:30.
We don't have the NFL Network on AT&T Uverse. This is one problem with being a cable guy still.
What's
I don't have
Uverse?
NFL Network. It's AT&T's cable service.
Okay.
Since I don't cut the cord yet.
Best Giants win since I don't know. It's been a while. What was I saying?
I'm in a huge bear market with the Lions. Dan Campbell, I thought I actually believed in, and
I bet the over.
Same old Lions.
But yeah, they scored 0 points. Anyway, so I think it's a combination of football being back. So I'm listening to a lot of football podcasts and just not really going many places. You know, podcasts are listened on the go, walking, commuting, not doing either of those things.
I listen to all my podcasts when I'm running, and I put it on 2 times speed. That's how I plow through them. All right, so this is from the Morgan Stanley guy on Odd Lots. It was a pretty good one. Inventory of single-family homes is lower than it has been in at least 40 years. We're in a bizarre place where it's not a seller's market, but it's not a buyer's market either. It's kind of just we're in no man's land for real estate right now, right? Because there's not enough inventory. Yes. It's not affordable. What's this Ned Davis one?
Let me just check. Let me just do some channel checks here. What's going on with that house in my neighborhood that was listed for 7.25, which is just not even close. Yeah, they're not budging. They're not budging. So they're at
waiting a while.
They're at 685. But I think this is the point. People are listing their house for 50% too high, and then they're cutting the price. They're cutting the ask by 10%. It doesn't work that way.
If I was in the market for a house, I would pick 10 houses and I would lowball all of them. I think eventually someone's going to bite. If you were a buyer, I would start lowballing everyone and just waiting. Seems like the time to be patient.
So who's going to blink first, sellers or buyers?
I don't know. It depends. Like it's
going to be situational. It's going to be situationally dependent.
Because at a certain point, if you're selling your house, you probably need to buy another one, or maybe you have one lined up to buy. So eventually, you need to sell and get out of it.
But here's the thing:
2 mortgages.
Here's the thing: home buyers need to buy a home, right? If you are having a second child, you have to get out of your apartment.
Yeah,
that's it.
There'll be a natural. Even though inventory is going to be lower, there's going to be always the people who are selling their home they have to buy. They have to buy. So that's a natural progression of some inventory will still be there.
My point is, sellers, generally speaking, don't need to sell.
Oh, whereas people need to buy at some point for household formation. Yeah.
Yeah. So
true.
So that's the thing that could get buyers to blink first and keep prices relatively from falling apart. So Rob Anderson from Ned Davis tweeted, unlike in the mid-2000s, home builders have shown restraint in the cycle and have not overbuilt. As a result, inventories for existing homes remain relatively tight.
See, this is the thing that stinks. Millennials and young people needed there to be housing overbuilt right now. Like, this is what they should have done. We should have overbuilt this time.
Yes. But
it was never going to happen because of the last time.
And then he also tweeted, millennials, the largest generation in the U.S., should remain a long-term tailwind for household formations and demand. And he's got this chart that shows U.S. population aged 35 to 44, going back over time from the baby boomers to Gen X and millennials, and it's showing 1.2%. What is this gain per annum? Is that population growth or is that entering the 35?
I think that's household formation, which I learned on the Odd Lots podcast. Do you even know what household formation is?
Is that just marriage?
So the way that he explained it, let's say you have 4 friends.
Yeah, go ahead. Hit me.
4 friends. This is the example he gave. 4 friends moved to New York City out of college. They all live together. That's one household being formed. Then they decide to split up and each get their own place because they get married or whatever. Now that's 3 more households being formed because you net out the one that was already formed. So that's how household formation works. It's basically people getting into a new place, whether that's renting
Okay.
or buying.
Where the heck do they get this data? Is this on the blockchain? How do they calculate this?
That's a good question. All right, one more from Morgan Stanley, the same one. Existing home sales falling faster today than during the great financial crisis. You can see that red line there just dropping off. It's at a faster pace than after the real estate bust, which is kind of surprising if we're to stay on this trend. All right, Bill McBride, one of my favorite people to follow in housing, he says we're going to 7 years of purgatory for housing prices. So he says we're up like 40% since the pandemic. He says the most likely scenario now is nominal housing prices declining 10% or more from the peak and real housing prices declining 25% or so over the next 5 to 7 years, which I think that would be you go down 10, you stay there, and then inflation eats up the rest over 5 to 7 years. That would be basically like they'd go nowhere, which honestly, with the amount of gains that we pulled forward, probably makes a lot of sense to me. That might be a little on the high side in terms of losses that I would think. A lot of that depends on inflation for the reals, but that makes sense to me, right? Don't you think? 10%? I mean, that would
Not
still
good,
put
not
you at
good.
like 30 or 40% gains since the pandemic started. So like if you're a homeowner, you can't cry over losing 10% of your home value.
I agree. You have to zoom out and show where price is coming from. Ben, 2 things that I'm sorry I got distracted by. Number 1, ARC, new 52-week low. I'm sorry, new all-time low, I guess. Or not all-time, but you know what I mean.
I can't believe their open letter to the Fed didn't work. Have I'm
I did
sorry.
not read it.
It actually wasn't. They were saying you're at risk of like creating a deflationary bust by raising too much, which I just think the whole concept of an open letter, I feel like anytime you call something an open letter, it immediately loses its value to me.
Is it why? Because it's too pretentious. It's like saying
Yes.
it's like calling a blog post an essay.
Yes, I'm penning an open letter. Yes, I think
Yeah.
that immediately loses cachet with me.
Ben, are you a Krispy Kreme aficionado?
I prefer Krispy Kreme's pretty good. I prefer like a bakery donut though. We have a bakery here in town, Forest Hills Foods. It's a grocer, but they have the best bakery. They're my favorite donuts in the whole world. We get them every Saturday.
Why? What do you get?
What don't I get? You know what my favorite donut is?
I don't.
2 donuts.
Something decaf.
No,
2 donuts. Good joke.
Anything. Long John with cream, the cinnamon with the chocolate
Wait,
on top.
whoa. Slow down. This is a, I don't know what you're talking about. What's a Long John with cream?
Is that not a New York thing? It's
A Long John with cream?
the long donut with chocolate on top and then the yellow custard cream inside.
Oh, we call those an eclair.
Okay, so that's a Long John for us.
Okay.
It's like pop versus soda.
Okay, what else?
I mean, I'll have a jelly donut occasionally with the creamy frosting, apple fritter. I mean, I don't discriminate between donuts. I go there. I get like 3 boxes of donuts after soccer games.
You like to diversify. You diversify
Yes,
your donuts.
I diversify.
So I'm asking
my
because
kids,
yeah.
my kids, they take a donut and they take a spoon and all they do is shovel off the frosting into their mouth and leave the donut there. They just eat so I get like 15 donuts because I know they're going to do that, and I want them to keep their little grubby hands off of my donuts.
We'll know things are bad when you only get a dozen donuts.
Yes.
Yeah.
Last week the lady goes, "Okay, so I'm going to charge you for a dozen plus 3." Yeah, 15.
A Carlson's dozen.
Yeah.
Somebody just emailed us, Ben, your local Krispy Kreme is available for sale in case you're looking to diversify some more.
Oh, okay.
Do you know where your local Krispy Kreme is?
Well, there's, I don't know, 4 or 5 of them probably, but there's
Not to brag.
yeah, there's a few of them. We talked last week to Ben Miller from Fundrise. That's going to come out soon for our Talk Your Book. And we were talking about how the whole housing slowdown increases. Yeah, I saw that one. All right. You've never heard of a Long John before? Come on. Is that a Midwest thing? I guess so.
I guess.
All right.
Yeah.
All right. So we talked about how a lot of people have been saying to us, hey, all these investors and institutions that have been buying homes, they're screwed because now that it costs 7% to borrow, their cap rates are going to be way lower. There's no way they're going to be able to afford doing all these rentals. Now there's this, and Ben Miller said, I don't think that's the case. We can raise rent. We can build all these things. We have economies of scale. We're going to be fine. And Wall Street Journal had an article about this saying basically the builders now are going to the investors and saying buy 10 to 20 to 30 or 50 homes from us and we'll give you a discount. So they're looking at like discounts of 20% of what they would have charged home buyers if they'll buy a huge block of them. So unfortunately, I think this is just going to make the situation worse where institutions who have the capital are going to be able to now get bigger bargains on houses, even though rates have risen and they should be hurt.
Finally, institutional investors are catching a break.
I
By the
just
way,
think they're going to look
we
back in the future. Sorry, they're going to look back in the future in 2020, and it's going to be this huge pivot point in the housing market. And I think that's going to be the time where they're going to show like housing just went off the rails in the United States, and a huge group of millions of young people were screwed for the rest of their lives.
You understand why people are upset with the Fed?
The Fed, but I think the housing thing is more of a government issue than the Fed.
No.
Obviously you can blame the Fed now for the rates.
They were buying mortgage bonds in March by the boatload.
Yeah, what they did
fucked
to
up.
rates didn't help, but I still think that it's the government's job to allow more houses to be built and get rid of all the red tape to build houses.
They're not solely responsible. I agree with that.
Right.
What was I going to say? Ben Miller. A little tease from Fundrise. We speak to him on Monday about. Ben said to us a couple of months ago, where would things start to get dicey? And he said a 7% mortgage, or maybe he even said 6%. And I was like, well, how does that happen? What are you talking about?
Right.
And
He said
alas, here we are.
8% is on his horizon, which is not that far from where we are. All right, here's an inflation thing that's rolling over. This is from RealPage Analytics, Jay Parsons. The weakest Q3 for U.S. apartment leasing in 3 decades we've tracked. He said it's not a total collapse because vacancy and turnover are still lower than normal, but remarkable change in momentum. You can see the chart here. Apartment demand basically is stalled out. And the idea here, hopefully, is that rents are going to start falling because of this, because the demand, so this means household formation is slowing.
Yeah, what drives apartment demand?
A lot of it is household formation. So if you think a recession is coming, are you going to move out of with your roommate? If you share a roommate with someone, so have a roommate and share a place with someone because it's cheaper, are you really going to go out on your own and get your own rent because you're worried about losing your job? So I think the problem is they're trying to slow household formation.
But again, rents were so elevated that you could have record year-over-year declines and still be higher than you were 3 years ago.
True. But if demand slows, then that means rent's going to slow, and that's what's happening. Rents are slowing. It's already rolling over. All right, someone sent me this mortgage product interest variability, and it shows all across the developed world, Australia, Canada, UK, France, Germany, and then the US, and it shows variable rates or long-term fixed rates. In the US is really the only country. It's like 90, look, if you're eyeballing it, 95%, 97% are fixed rates. Every other country is mostly short-term fixed or variable rates. Australia is like
Awful.
90% variable.
So Canada, Ben, are you seeing any changes in me physically?
From what? Did you like eat a radioactive spider last night or something? What?
Well, I'm still working out. Robin asked me the other day, she goes, are your shirts getting tighter? And I said, glad you noticed. I'm glad you noticed. So yeah, I'm bulking up.
Using your trainer.
I'm bulking. I'm still using my trainer
Right.
twice a week. So he's from Canada, and we talk about these things. And looking at this chart, it looks like it's all like 90% medium term fixed. So if you were locked into a sub 2%, and they were like low. If you were in Canada, and we have a lot of Canadian listeners who I'm sure we're going to hear from about this. If you were locked into a 2% mortgage and you reset at 7, or I don't know where the numbers are there, that doesn't work.
I can't imagine. That's got. I'd look at an update from some Canadian listeners too. Is Toronto finally rolling over, in Vancouver? All these the hottest housing markets in the world, are those places finally starting to roll over? They should, right?
So yeah, my trainer's from Canada, and from Toronto, and he tells me about all these things. So, survey of the week: 42% of buy now, pay later users made late payments toward those loans. As survey finds, that sounds really high.
These places are going to have to like merge together or something, aren't they? How do they all make it on their own? The buy now, pay laters with rates this high. I don't see how they all survive. The business model, it was a great business model for 0% interest rate world, not 5 to 7% interest rates.
You know what else was a great business model for the pandemic world that's no longer true today? Peloton.
Are you using yours as a clothes hamper yet, or a hanger?
More or less.
Okay,
You still use yours.
So I want to put this out there. One of my friends told me try the interval classes. You can use like 2 to 8 pound weights, and it's you ride for 5 minutes and then you do 5 minutes of weights, and you ride for 5 minutes and 5 minutes of weights. And I'm using 8 pound dumbbells, so not huge. It's an amazing workout. It's you could do them with 2.5 pound weights, and I think you get a good workout with your arms, upper body.
Okay.
It's
Yeah, I
very
should do
good.
that.
It's like a full body workout. Okay. So Chief Executive Barry McCarthy, who took over in February, said he's giving the unprofitable company another 6 months to significantly turn itself around. And if that fails, Peloton likely isn't viable as a standalone company. Boy,
What's 6 months going to do?
I mean, would you not be sending your resume out to everyone if you worked at that company? They've had 6 straight quarterly losses, culminating in a $1.2 billion loss in the recent quarter. This was an $8.5 billion company at the end of 2019, before the pandemic boost. So they're an $8 billion company. They went to 50. Now they're below 3. 3 honestly does still seem high. Do you think it honestly just goes out of business, or
So I don't. So let's just pause here. So it was an $8 billion market cap pre-pandemic.
someone has to buy them, right? Like, it's still,
Was,
for me, it's a great, I love their product and I love their classes.
was this so poorly managed that they thought this growth would continue forever?
Well, they went
I don't
from
know,
like
but
2,000 employees to 8,600 or something.
yeah.
This
Okay. So grossly mismanaged. I think that I don't think Peloton's going to disappear. Somebody will buy them because what's their recurring revenue? Is it? I think it's a few $100 million on the software
that's
alone.
the thing. People are paying $40 a month for their classes. They have that recurring revenue element. You think someone would find some use out of this company?
Yeah, I
Right?
think so. I
Put a
think so.
They both have the big screens. Put a Peloton in the middle of a Tesla, and you can ride your car to work.
All right, so let's do this. Who are the buyers? Nike, Lulu, Amazon?
Apple. So they already started
No,
selling the bikes on Amazon.
not Apple.
Amazon would actually make kind of sense. Okay, a bunch of people sent us this. An economist from Yale did a study where he read through 50 of the most popular personal finance books of the last decade or so. Rich Dad, Poor Dad, I Will Teach You to Be Rich, some from Dave Ramsey, Susie Orman. And he's saying the stuff that personal finance people tell you to save between 10 and 15% or maybe 20% at a young age is dumb. It doesn't work. He's saying you don't make and spend the same amount of money at all stages of your life, so you need to force yourself to, so you shouldn't have to force yourself to save the same at every age. Basically, he said you should have a negative savings rate early in your life, high in midlife, and negative in retirement. So he's saying you should wait till you're in midlife to start saving because that's when you have more money, and at that point you need to enjoy it a little more. I kind of get what he's saying. I think my takeaway from all of this is that there's just never going to be a one size fits all for anyone.
Boom. That's where I was going to go. You can't give rules of thumb for this. This is
No.
so personal. It depends on your personality. It depends on your upbringing. It depends on how much you make, how much you want to spend, what type of life you live. It depends.
I think some people don't have it in their psychology to be able to say, I'm just going to start saving when I'm 40, because if they don't develop those habits when they're young, they're never going to develop them. Other people can.
I hear that school of thought. Yep.
Other people could say, I know I'm going to start saving when I'm 35 and I'm making more money and I'm going to enjoy myself now. So it's one of those, it depends. All right. We haven't talked about crypto much lately. This is from Alex Good.
Yeah.
On May 29th, 2022, Treasury Direct's quarterly website traffic surpassed Ethereum's. It's now 1.8% larger. And he said, very exciting projects. Congratulations to the team. So this is an interest rate chart versus crypto, obviously. This is actually, I mean, I don't know, maybe they're cherry picking here, but this is kind of amazing. And one thing I will say about crypto, I'm surprised at how well it's holding up. If you would have told me the headlines and what's going on with the markets and the Fed, I would have been shocked if you'd have told me 6 months ago Bitcoin's below 10K. I'm surprised.
You would not have been shocked.
No, I'm surprised it's holding up as well as it is.
Over the last couple of weeks, it's not really doing much of anything, which I don't know if that's, I don't know what to make of this. I won't give my opinion if that's bullish or bearish. I guess time will tell. But I am surprised as well, just seeing how poorly risk assets have been performing, that that Bitcoin and Ethereum are not doing worse. I'm surprised. So even like on a day like today, Bitcoin is down 0.5%, S&P is down 1%, Nasdaq's down 1.5%. I mean, surprising.
So
maybe there's nobody left to sell. Everybody's already washed out. I don't know.
Yeah. Do you think it is like the volume so low that there could be bigger players that are able to, like Sam Bankman-Fried is propping up the prices somehow? Is that possible?
I don't know.
Could be.
I don't know.
All right. Last week we asked why they're called gilts for UK government bonds. A bunch of people sent us this. They're called gilts because the original certificates issued by the UK government had gilt or gold around the edges.
Oh,
So I guess
interesting.
another. So if you got the certificate, it had a gold on it.
So we went upstate over the weekend. We did the pumpkin picking thing. You did that yet?
Oh yeah, just
Yeah.
packed with people.
We do it every year. I mean,
Every year there's another farm that gets into the game of that
great
stuff.
inflation hedge, by the way. Great inflation hedge to
What
own
is?
one of those farms. Prices go up every year
Seriously?
like clockwork. So we were gonna get the kids McDonald's, but the McDonald's that we go to, and I've gone there 100 times, was closed. And the reason why I say I've gone there 100 times is because I've never had an issue with the fast food being fast. Is that like
Right.
one of the that's like top 2 important,
Yes.
right? In fast
You know
food,
the other
want to be
thing, like as an inflation hedge, we can feed a family of 5 for like $25 at McDonald's. It's still a pretty darn good deal.
yeah. So, okay. Burger King, on the other hand, and by the way, who owns Burger King? I thought it was
It used to be like Yum Brands. Is that it or not? They are by far the slowest
no.
fast food place there is. Wendy's is a close second. Burger King is so slow.
Okay, so anyway, so for the grown-ups, we got Greek food. So we go to the drive-up line, and there's like 6 cars, and it's not moving. And I said to Robin, "You go grab the Greek. I'll go inside and get Burger King." And I'm waiting there for 10 minutes, and I'm like, "This was a bad decision. It's not moving. There's 4 people in front of me. Nobody has ordered. It's just not moving." Robin gets back. I said, "I don't, there's only one person ahead of me now. Should we just leave?" I said, "How's the drive-through line looking?" She goes, "The same." So my question to you is, how does this happen? Like there was a chain on Long Island called Friendly's back in the day. Is Friendly's national? I don't believe it is, but I'm not sure.
Nope, never heard of one of those.
So you went there with your kids, and the thing was they had this killer sundae. I was a Reese's Peanut Butter Cup guy myself, but they had all sorts of sundaes. And so the deal with Friendly's was it was notoriously slow. If you went there, you were in it for the duration. It's a 2.5-hour ordeal, like rain or shine. That's just what it was. Just notoriously slow. How is that ingrained in the culture of a company? And so my question to you is like, why is Burger King always so slow? They're in the same business as McDonald's, like literally identical.
Yeah.
Same exact business. And how come they just can't get their shit together?
Didn't they get purchased by a private equity?
Was that
place
Tim
a while ago,
Hortons?
then they got spun back out. I don't know.
Oh, maybe it's part of the Buffett Brazilian deal. I can't remember. But anyway, come on, Burger
I am a
King,
fan
get
of
your
the
shit
Whopper.
together.
I like the Whopper.
I love the Whopper. I like it with cheese. I like the Junior. I like the full size one.
Yeah. All right. Recommendations? I got a bunch.
Why
All
don't you
right. So
start?
I'm doubling down on Welcome to Wrexham on Hulu/FX. I think we're like 15 episodes in. I think it might be my favorite new show of the year.
Wait, I'm sorry. What show?
Welcome to Wrexham. So it's the show where Ryan Reynolds and Rob McElhenney bought a team. I
You're
said
such
on
a
my
Ryan
blog the
Reynolds
other day.
stan.
Yes, him and Rob. I would be friends with those guys. They're awesome, and it's funny. It's like the soccer stuff is good. I definitely appreciate soccer way more now than I did in the past. I used to be one of those like football is the only real sport and soccer whatever. I have so much more of appreciation for soccer now, and I actually went and rewatched my Green Street Hooligans movie with Elijah Wood from like it's also got the guy from Sons of Anarchy, the main guy.
Green Street Hooligans.
This is like a mid 2000s one. I could not find it anywhere. I had to watch it on YouTube because someone put the whole movie on YouTube. It's about Elijah Wood goes to England because his sister lives there and married an English dude. And he joins a firm, like every soccer club over there has a group of guys who basically just go and start fights with their team fans. And they basically don't even have any soccer in it. It's just these guys go around and get in fights. And it's a great movie.
Are you watching, speaking of Hulu, are you watching The Patient?
I watched one episode and haven't gotten back into it yet.
Okay. It's okay. It's not great.
All right, yeah, I thought it was all right. I got sucked into Dahmer on Netflix. Did you watch it yet or not? The Jeff Dahmer show.
Robin watched it without me. That actor's good. The
He's
guy that
very
played
good.
Dahmer.
It's the whole show makes me very uncomfortable just because it's a real person did this and it was real victims and it's creepy and I can't look away and I can't stop watching. But it makes me very uncomfortable the whole time. And I just can't believe that a guy like this existed and he was a real person and all the stuff that happens about him almost getting caught all the time. It's crazy. All right, finally, and speaking of serial killer stuff. I watched Black Phone with Ethan Hawke. It's on Peacock, I
Why?
think. Why? Didn't you tell me
Y-
to? Did you
First
tell
of
me to
all, I
watch that
told you
one?
I am not. That movie stunk, relatively
Okay.
speaking.
It wasn't
Relative
that great.
to relative to Ethan Hawke's expectations,
Yes.
it stunk. And you're not a horror guy. Uh, no,
Well,
this movie stunk.
serial killer is different than horror, right? I like serial killer stuff, but it first of all, they never explained anything of why stuff was happening. Like why
It was
anyway.
like moderately entertaining, but just bad. But you know what really surprised me? What this doesn't make any sense. The critics gave it an 82 and the audience gave it an 88.
Yeah, it was just kind of I thought it was kind of a dud.
It
But
wasn't. That's exactly right. It's a great word. It was a dud.
the only reason I watched it is because he was on Smartless a few weeks ago and I listened to it and they talked about a bunch of his old movies. Is he one of the most underrated actors of his generation?
Perhaps because he does a lot of independent stuff. He's not a
Yeah,
studio guy.
he's got a lot of stuff that's not great, but he did back when he was young, he did Gattaca, Reality Bites, he did all the Sunset movies. He did Training Day, Dead Poet Society, Alive, Boyhood, White Fang. Like at every stage of his career, he's had like an amazing movie.
White Fang was one of my favorite childhood movies.
Yeah, very good.
Um, yeah, Ethan Hawke's the best, except for Black Phone. That was bad. Uh, so I didn't mention this movie only because it was it was like I'm like embarrassed to say that I watched it, but I blame Sean Fennessy, who was tweeting about it. The movie is called Speak No Evil. Uh, just horrifying. It's not a
Bad.
recommendation. No.
Okay.
I can't say good because it was so disturbing that I feel like a psychopath saying that it was a good movie.
I feel like you've watched a lot of disturbing movies lately.
Well, it's true. So here's what Robin does. She walks by me and she goes, "What are you watching?" And she goes on Wikipedia and she reads the plot. And so for this movie, she goes, "Did this happen yet?" And I said like that. This was the most fucked up movie I've ever seen. Like,
Okay.
but I think it like won like it did like international film festival type stuff. You know, it was like well received. It was just beyond disturbing. Beyond disturbing. Not a recommendation. If you do watch it, don't blame me. But I was been thinking about this. I don't like all bad horror movies. So for example, I was futzing around on Friday night. I was home alone. Robin went out with the girls, and I was alone. And so I'm searching through HBO Max, just seeing what's up, and I come across a movie called Tusk. And I go, I never heard of this one. And I'm looking at the cast. I'm like, Justin Long, Haley Joel Osment, Johnny Depp, directed by the great Kevin Smith. Horror movie. This looks interesting. Here's the info. A U.S. podcaster, Justin Long, ventures into the Canadian wilderness to interview an old man who has an extraordinary past. And the American learns the man has a dark secret involving a walrus.
Okay.
Now, credit to me, this movie was terrible.
Okay.
Absolutely terrible. Now, it was goofy, right? It was going for
Oh, it's a
I don't know,
Kevin Smith
satire.
movie.
So I said, I don't know if it was satire of what, but it was a goofy horror movie that was just terrible. Just terrible.
Do you
So,
ever hit, do you ever hit-
I don't-
do you ever have a stop loss on your movies? Like,
Yeah,
I'm
I
not
do.
going to finish this.
Well, I'm more of a stop loss guy with TV shows. By the way, House of the Dragon. I'm into
Pretty
it.
good. It's
They already lost me though. I have no idea what's
I
happening.
have the characters
you?
switch every episode. Yeah, I feel like it's very ambitious to keep just pushing forward in like every episode. I have no idea who anyone's name is. My
Right,
wife asked
yeah.
me like, "Did you notice that this happened and this happened?" And I'm like,
No,
"No, I
no.
blank slate, but
Yeah.
I'm entertained."
Yeah, like I know 40 to 60% of what's going on, but I'm into it.
Yes, I like it.
Yeah.
The progression of the king, what's his name, Viserys or whatever. He's like the stock market this year. His progression of health is the stock market this year. That's my verbal meme.
Is it Viserys or Viserius? Or Targaryen or Targaryen? I feel like they go both ways.
I got nothing.
All right.
Credit to you for making it through the show after being up till 4 a.m. at the ER.
Look how glassy my eyes are.
All right. Sign Kobe's cast for me. Put an Animal Spirits sticker on there or something for us.
animalspiritspod@gmail.com. Thank you for listening. We will see you next time as the Dow goes green.
Did it really?
Yep.
Oh, okay.